Good afternoon, Scott Redler, T3 Live. It's Monday, first day of the week, and it definitely was an interesting one. For those of you who did not hear, there was a jobs report last Friday, and it was worse than expected. So what did the market do? It went a little nuts, right? Futures, I think, closed down 18 to 20 handles. Everyone is like, oh my goodness, this is the end of the world. But you know, I'll be honest, no one kind of knew how to react because for the last 3 to 4 years, bad news has been good news, and then over the course of the last year, the narrative is trying to change to where, you know, good news could be good news until that jobs report a month ago when, you know, you had 295 print or whatever that was and the market kind of tanked. So on Friday when we had 127,000 jobs added, I was just like, hey guys, you know, just enjoy Passover, enjoy Easter. We'll figure this out on Monday because all you're going to hear is banter and the discussions back and forth, and it's all meaningless noise because just as nervous as the Bulls were, it was probably just as excited as the Bears were. And what happened was just you know, a day in the life where if you had levels planned out, you were able to make maneuvers. Okay, if you came in clear-minded, like I came in long, and I was like, oh my goodness, I thought of every worst-case scenario. What could happen? I'm like, if we open below 2040, do we rally to it and then fail and then go to 2020 and I just salvage everything? Do we open above it, get out, or do I add and then have a monster day? Do I give things a little time? So I was playing with a lot of numbers in my head too as I went out long. Apple, Facebook, Twitter, Chesapeake, some calls. So anyway, you know, you get to the charts, and the charts are what don't lie, and they're not the ones that argue with each other. It's only analysts. And we've been talking about how this level here, right, this 204 to 204.40 level has been the lower end of the midterm area of the overall channel. I should say that 5 times really fast. Not. Anyway, this gives you a little bit more clarity on that, as if you had a huge range, which is what the market's basically been in, a huge range since before. You could go back all the way to here, almost back to September, where you had 198 to 200 as the low end. Then you had a brief move above the upper end, you know, into 2012, and then, you know, this was the mid-range. This was the flat line of where the market was. So made sense to say, okay, if we hold this, you know, maybe we just held higher. Took a lot of time to hold this and rebuild before a move, so now we're holding higher while the market sorts through. You know, was this a soft spot in the jobs number? You know, due to the weather, because the weather was freaking cold. The weather has been horrendous in the Northeast, so maybe that had to do with some of the weaker than expected economic numbers. And then everyone's worried about what's going to happen with earnings with the strong dollar. So the strong dollar, or the dollar down today, was probably something good. And then, you know, oil bouncing, where one of the problems of the market would be if oil broke the 40s and went into the 30s, defaults in the refiners and those, which oil was up and away from the danger zone. So you put that all together, and there's a bit of a rally. So you go back to the chart here of the spiders. So the bottom line is it held. Okay, this is where we held, and it showed a little bit of power when it crossed above this. So if you were short, maybe you covered around this 207, or maybe when it reclaimed Thursday's low, you had a red dog reversal around 205.40. So you had a lot of different ways to make adjustments. Once here, and then into resistance. You know, I even said to people, I'm like, why would it close on the dead highs here and break above it? It's really, we have earnings season. We're just lucky that this even held, and now we'll see what happens tomorrow. Typically after a strong day, you get a week open. We'll see. Be nice to get a little follow through. If anything, I'd love to see this hold now. So if you go back to here, a little different. This was your red dog reversal. This was your resistance. We're probably not quite at that resistance yet, or if we want to put together a downtrend here, this downtrend comes more in a 210, so it would be nice if this happened to be somewhat of, I guess, a day one. So this is your next point of reference, another one, and then that's that small downtrend. We'll see if we get here before earnings or not. But overall, it would be nice to hold this 207 versus just engulf it the other way and turn into a choppy mess, but we'll see. Let's look at the Qs real quick. Nice day in the morning call with Brittany. I talked about what would this Qs do here, and what did the Qs do? It held and showed some power and engulfed this 2-day range. So we'll see what happens in time if we could take this out. Holding above this would be nice. What did the Russell do? The Russell held in there. I drew a trend because I wasn't sure with the weaker than expected jobs number. You know, would they sell growth? And this trend didn't even get tested, and You know, you had a nice reversal above the 21-day and actually closed right back here. So this is still showing relative strength, closer to the highs than most other indices. What did the mid-caps do? Mid-caps, wow, strong day. So showing you some risk. You've got to get a little bit of short off the brain, I guess, right? Why would the mid-caps take out this level right there if it's going to just fail, you know, and then wind up holding higher? So there was some clues and some ways to maneuver. This held a 21-day. So, and then the bios, you know, were a little lackluster out of play, but no big deal, I guess. You know, money's rotating somewhat into the oil area, so still holding this 333. We'll see if that continues. This became a sell once it broke the 8-day right there, and it's still trying to figure out what's next. We'll see. The XLE broke above this mid range. Okay, so if you were long the XLE in here, saying, wow, we just saw some commitment, it held halfway of this igniting bar. I'm gonna add in my note, I put an add above, I think 78.20. It did okay. You know, it seems like it could continue if it wants to. Last week with Jill, we went over Schlumberger. You know, nice little move above this, still working. Over the weekend, I had CHK, just as a little bottom feeder, but you know, closed pretty well. I don't have it overnight tonight, but still looks fine. It did clear this level that I put in my note also. Get here. So there's like things going on everywhere. As far as my stocks that I typically really focus on, like Apple, I had a lot of Apple, you know, on Thursday, and I was definitely like, oh, it was the right thing to do. Don't be upset, because I usually don't take much risk into a jobs number, but I figured if it went without me, I'd be upset. If you look here, very, very tight pattern. Started to get above the moving averages right here, so I figured I need to be in at least a tier 1 and change. And then if it breaks above this 126 area, 126.40, you could add to it. And then you had a day like this. It's a nice day in Apple. Okay, it looks like this range that we've been trapped in could change a little bit. So we'll see. You know, it'd be healthy if it stays above this 126.40. And you know, I'm long about the same thing I had overnight on Thursday, and it'd be nice to see a little follow through, you know, a little upside action to it into the 128s. We'll see what happens, but ultimately strong day, day one. It's been in a consolidation for so long. It's friggin' one of the number one company out there, PE of 12. They're going to hopefully have a buyback, a dividend, a good quarter, the watch, you name it, and you know, it's been tight. Every time it's tight, you know, it usually resolves to the upside. So you don't want to go back to the well too much, and might take an earnings move, but it could get back up to there prior. So this was your first clue that it's on its way. And then you had the other stocks that broke out in the past month, which was Facebook and Twitter. I had both of them overnight, and Facebook, nice day. You know, this could be your day one wake-up call where you had your range trade where it came back and retested. It looked as if it might not hold it, okay, but came in. Here is buy area 1, buy area 2, sell some strength, nibble into this, and now we'll see what happens next. But this definitely you know, puts it back in play, hopefully for better action. You could almost draw yourself a small descending type channel here, and above this area could continue. We'll see what happens, but this is a leadership stock. Most indices went down to the 50-day. This held the 21-day. Twitter, the same thing. Twitter actually is holding the 8-day, showing a lot of momentum. We've had a lot of trades this year with Twitter. Twitter is something I had overnight also, and I still have. You know, this was a nice breakout to start the year, gap up into earnings. Here was your pro gap, red dog reversal. This is when it got back on its horse, and now it's been holding somewhat above this, you know, 50-ish area. So I am in some, and I'd love to be able to get some kind of day trade with size through this 5180 for a move, you know, back to, you know, the 50s. You know, you have the Periscope, you have video, you have a lot of things going on with Twitter, and I think it's going to be a news medium, you name it, but ultimately it's above the 8-day, above the 21-day, acting well. Let's hope we get a little bit of momentum here. Looks okay. Netflix, I actually shorted it today. People, when it looked as if some things were, what's it called, breaking down or wasn't sure, but then I covered real quick, and now I'm long overnight. We'll see. I'm long small. You know, day one maybe, just for some upside. It held the gap. It's still well off of those lows from earnings. It just retraced and corrected, and it's been out of play. So today is worth it a little bit. Same way, I guess, some people went long Google today on the red dog reversal. You know, if you sold it at the double top, which is what you had here, where you sold and got short here, this was your red dog reversal, okay? From 580 down to the low 530s, it's worth a try. It's not a leader, it's not an A-plus trade, but here is your entry according to the strategy. 540, you put a stop in at the low here of 535, $5. If you did that today, you made it almost 4. And now I guess we'll see what comes out. Maybe it tries to rally back into resistance around 550. So that's just a trade. There are trades out there, and that's what you try and do is find them. And this one looks broken, not all in, but something that could have some follow through. Amazon, actually, nice day today. It actually is in the stronger camp. It also held going sideways for that 365 we were talking about. Kind of woke up a little bit today. So we'll see. Not a great trader, but it's still showing commitment to the earnings gap. It's kind of strong. Tesla gave you a quick move in the first 45 minutes before fading down. Still, there's more of a life and more of a heartbeat here, more of a reason to be a focus of it. It kind of broke through this downtrend. And now I guess with a little bit more work above this gap here. Now if this gap stays unopened or open above 197.50 for a little while, chances are this can continue, but it's still below all the moving averages. And I guess wait for the next Musk tweet for more upside, but it's definitely, it moves around and there are ranges, and you look at the 5-minute chart, it happened quick, but I guess some people might be frustrated. You had your first gap up, and this was really your day trade when it broke above this 201, gave you a move to 205, and if you tried buying a little bit of a dip, it didn't really give you much of a bounce into the close. So if you're trapped in it, hopefully you get a little follow through tomorrow. Still looks good compared to this day, the move, the commitment to it. But again, broken names are a little harder to trust, and this has been somewhat broken. And oil, guys are like giving me high fives on Twitter that I called a bottom in it. I didn't call it bottom in it. I just said on this day right here that there's a 65% chance that was the low. Don't press it here. Look where oil has come from. You do not want to be the chasa. You know what a chasa is? It's not a bull or a bear. It's a friggin' pig, and pigs get slaughtered. And you had a lot of downside in oil. You had it, here. When that trend got broken, you had downside here. You had downside here. So if you were pressing there, you know what? You might be caught in a little pain trade for a little while. All in all, oil with the dollar and this and that, it's acting a bit better. It's now cleared this little trend here that we spoke about with Brittany in the morning call. And now let's see if it holds above and continues. You definitely have some room here if it wants to. And that comes into the 19s. So you don't want to always go for the juice, especially where it came from. But again, picking bottoms are hard. But here you had this reversal that held. So that could have been your higher low for your entry or whatnot. Metals, this morning kind of said, I wouldn't be chasing up here above 117. But it's also just like the oil trade. Here was your reversal right there, and it's been a big move. And I guess see now if it holds this gap, it's very choppy. You need to have a thesis in gold to stay long it. Doesn't mean it's a short either, but again, some of the strength was sold, so we'll see what's next there. And all in all, there was a lot of things to do. The VTF is doing great. You guys are communicating, putting ideas out there. I think everyone was kind of calm, cool, and collective coming into today. We had a plan, Redler All Access. I said to you guys before on Thursday, I'm going long Apple, Facebook, Twitter. I don't think any of you guys gave me a hard time. After the jobs report, you guys said, listen, long time between now and Monday, and then I tried to give a plan, which is what you could do. If you salvaged a little bit of the trade as things went green, you were able to feel good, take a deep breath, and then go back to them for watching the strength there, and now you could stay with some. So if you have a cooler head and a plan, it should always prevail. Now at this point, do I think we're going to break out and go and be in a bullish crazy market? No, I think we're in this range, and it's going to continue. Some stocks are going to act better than others. Some days will have better setups than others, and just keep moving forward. Tomorrow I'll be here for the morning call, and then I leave in the afternoon for Florida. I'll be trading probably from the book office here and there, and then we have a big conference on Thursday. You can go online and check it out. It should be cool. A lot of very good traders that are going to be speaking. Not a lot of them do that, and they're going to give you a little bit of insight on how they've had longevity in this market. Most of them have been trading 15 years, and if you've been trading 15 years, that means you can make a living doing what we do. But you have to have a routine, you have to like it, and you have to have discipline and a plan. Hopefully you have a few of those, and then you get a few more. Have a great night and enjoy the championship game tonight. I'm kind of thinking Duke, but I don't really have any edge here. But I will be watching.